All right, let's continue our discussion of the Fed now with the former Fed Governor, Randall Kroszner. He's served on the Fed's Board of Governors from March 2003 through late January 2009. He's now an economics professor at the University of Chicago Booth School of Business. Great to have you here with us. And let's start with what Mike just mentioned. This confusing sentence about explaining why they thought market interest rates rose after they started QE2. Does it make any sense to you? I'm hoping you heard it.
Yeah, I heard a little bit of it. I think one of the challenges is that what the Fed was doing with QE2 was worrying about the potential for downside risk, in particular the potential for deflation. So in some sense, they bought some insurance against that by buying more assets. One of the things that's going to do is start to boost up inflation expectations a little bit. That's what they hope, that they boost it up a little bit, but not too much, and that's obviously what a lot of the discussion was about. I think perhaps one way of making sense of what they were saying there is that inflation expectations will move up a little bit, growth prospects will move up a little bit, and so that will start to move interest rates up a bit. And that would be consistent with what they were trying to do to avoid that debt deflation spiral where you get into a very problematic situation of increasing or decreasing inflation, increasing deflation, greater debt burdens, lower growth. And so I think that's how you make sense of it.
I wonder, Rick Mishkin was on Bloomberg Television yesterday, formerly of the Fed, of course, and he was saying that the economy has improved to the point where he doesn't see QE3 as necessary. He doesn't think the current Fed thinks QE3 is necessary. He says the market might perceive that as the Fed just buying U.S. debt to help us fund our deficits. Do you think the market perceives it like that anyway?
I don't think the market perceives it like that quite yet, and I think the market reasonably thought that this is going to be something that will help to support growth and took out the tail risk of deflation. And so I think that's helpful for growth going forward. Certainly the tax compromise in the short run is helpful for growth. I think there are a lot of challenges going forward for the long-run fiscal trajectory in the U.S. And I think that's another reason why, since the tax compromise, the interest rates have gone up, because they're very concerned about, well, how is this going to end? This may be good in the short run. We'll boost growth a little bit more now, but we've got 10 years if we're holding that 10-year Treasury, and the Treasury's got to figure out how it's going to fund that debt.
Yeah. But do you have confidence that the Fed can engineer kind of a soft landing at the end of this?
Yes. Yeah. One of the things that I was concerned about is how things are going to end in fiscal policy, but obviously there's also a challenge in monetary policy. So the Fed is certainly providing a lot of liquidity into the system. The balance sheet will grow to $3 trillion. When I was there at the end of 2008, early 2009, it was, it had only started to grow from $800 billion to $2.4 trillion. And so there's a lot of liquidity that's going to be in the system. Can they take that out without causing inflation? I think there's a good chance that they will, because one, when we were talking about all the policies when I was there about adding liquidity to the system, we always thought about exit strategy, how to get out. And I think that there's such a high demand for liquidity now that the Fed can provide all of this extra money to the system, and it's not causing inflation. The inflation rates have been coming down rather than going up. So I think it's going to be quite some time before we see actual inflation going up.
What about on the fiscal policy side? I mean, do you think they just need to sort of completely revise the tax code, clean up the spending, the overspending issues, and pass the baton from public to private?
We could do it just like that. That'd be great, but it's not that easy. But I think you guys, that's exactly right. The President's Commission came up with some very, very good proposals, really rethinking how we should structure tax incentives, how we should do spending. Unfortunately, I haven't seen any embrace of that in Washington. These were radical ideas, but ones that were radically important also. Thinking about ways to get rid of tax loopholes, broaden the base, lower rates, but still raise more revenue. That's exactly the right way to think about it. The bipartisan commission focused on it. I heard nothing in the discussions of the recent tax changes about those long-run issues, only about the short-run issues.
You know, Randy, I'm guessing we'll be out of QE2 before we deal with those longer-term issues. But I want to ask you about timing, because one of Ben Bernanke's criticisms of Japan was that they exited their quantitative easing much too early. What would it take, in your view, for our Fed to end its program early?
Well, I think the chairman and the other members of the FOMC are very well aware of some of the things that have gone wrong in Japan and are going to try not to make those mistakes. And I think that's one of the reasons why there's now a robust debate, and as you were discussing before, different points of view around the table of when they should start pulling back. I think it's too early to do so. I think going through with the rest of QE2 makes a lot of sense because I just don't see the unemployment rate coming down very much over the next 6 months. I don't see the inflation rate going up. But the thing that they will focus on that will get them to move quickly is if inflation expectations start to move up.
So is that the trigger? Is it inflation expectations? That's the trigger that gets them to start unwinding their positions?
I think that's the most likely thing to start to move early because I just don't see unemployment rate coming down too rapidly. Actual inflation, I think, will take a while to start coming back up because it's still been trending down. It's been very, very low recently. And but inflation expectations can move rapidly, as they did at the end of the summer. They had moved down to dangerously low levels. They've moved back up to more normal levels. But if they start to get out of control, the hawks around the table will mention that, and I think that will resonate very clearly with the other people around the table.
Randy, just about 30 seconds left. I want to kind of shift focus. Do you think that the new pressure coming in from Washington with the new Congress is going to hold back the Fed in ways that are problematic, or do you think that it's healthy?
Well, I don't think it's going to cause a major challenge for the Fed because I think broadly people are going to see that the kinds of policies the Fed is pursuing are reasonable for supporting growth and not generating a lot of inflation. I mean, I think if things start to go out of control, then of course Congress quite naturally will ask what's going on here. But I think this is a reasonable policy in the short to intermediate run, and so I don't see congressional interference being too great.
All right. Hey, Randy, thanks so much for joining us. Randall Kroszner there coming to us from Chicago.